Hey guys, how's it going? It's Andy from Magoo Investing. Welcome back. I had a nice little break for Thanksgiving, survived the traveling in the winter, which was kind of a nightmare, but it worked out all right. And today we're going to be continuing the Robinhood Top Stocks series, and today we're going to be talking about Macys. And this was actually a requested video, so if you have a company or just an idea in general you'd like me to go over in a future video, please put it in the comment section down below and I'll get to it as soon as I can. So I think Macys is a great company to go over right about now. We just had Thanksgiving, which is world famous for the Macys Thanksgiving Day Parade. And then as Black Friday and the holiday shopping comes about, Macys is one of the big players involved. As it's one of the largest department stores out there, I kind of assumed that the stock would be doing pretty well. I've had it as a past trade in the past year, but I haven't looked at it in a couple months. And when I went and looked at the stock, I was really surprised at how poorly it's done in the past 12 months. With it being down 45% year to date, I was really surprised that things have not been going very well. Going back even further on the charts, I think it's crazy to see that Macys has gone down 80% from its all-time high in July of 2015. And so the stock has not done very well in the past. As a result of the stock decreasing in price, the dividend has gone up steadily since then. I'll throw up on the chart or on the screen right now what the dividend payout's been in the past, but with it currently sitting around 10%, it kind of makes it interesting to look at if the stock maybe recovers for a little bit or goes horizontal for a while. As 9.5 or 9.75, depending on where you look, is a pretty crazy dividend payout. I've talked about AT&T on this channel, and I'm pretty sure the highest it got was around 8 or 9%. So Macys having this crazy dividend and the potential of recovering makes it a kind of intriguing stock to be looking at for the future. So in this video, this is going to kind of be more of a fundamentals-based discussion. Most of these videos on my channel are all about technical analysis. It's all about looking on the charts to see where the best potential plays are, just based off of prior price movement. Macys is kind of different in the fact that you kind of have to look at how the company is doing overall. Macys isn't exactly the type of company where you're going to hold for a week or a month and expect a 10% return. This is the type of company where you're going to be holding for a year, taking advantage of that dividend, and hopefully the stock price will recover a little bit. So we're going to talk about what the outlook on the company is, take a look at the charts, see what I see as a potential, maybe a short-term swing trade, because I kind of see something on there that's intriguing, and then we're going to look to see what the analysts say for the 12-month forecast for Macys. And before we get into it, I got to say that I'm not a licensed financial advisor, so I'd highly recommend talking to a professional, someone that can find you the best places to put your money going forward. And with that being said, let's go take a look at Macys on the charts. Ticker symbol M. So here we are on Robinhood looking at Macys today, ticker symbol M. As you can see, it was down 1% on Friday with a 53% hold and 12,000 people owning it. As we come down here, one of the things I like to point out is I've traded this in the past, and there have been a lot of companies where I sell because I'm more of a swing trader, and then I look at the stock price later and I missed out on like 20% because I didn't hold. This is not one of those cases, as the stock is currently at 1538. And back in September of last year, I bought at 35, sold at 36, and if I had held that position, I would be down a lot of money. So for the first time in a while, seeing a company that I sold early was actually being a good thing. So with that being said, let's hop on over to the charts, and we'll go to the long time frame just to kind of show the scale on how far the stock has fallen. So here was the all-time high in July of 2015, sitting at around $63 or $73. It fell, recovered a little bit, fell, recovered, and I believe this was the play that I had was from this nice little upward motion, and then the stock has since fallen. So to kind of save time of me just kind of looking at the charts, looking for important zones, I kind of highlighted some of my favorites. So we have this downward channel right here. And so this isn't exactly the best channel I've ever drawn. It only touches one time on the downside, and it's not super clean on the top side. But I just kind of did that to highlight how steep this decline has been recently. When the stock's down 45% year to date, you know things have not been going pretty good, and the year started here. So it's not even from this recent high. So the stock has since fallen. And then as we come in here, let's go to the shorter time frame. The stock has kind of been horizontal for a little bit. And so when you hear 45% year to date, or down year to date, and then the 80% from its all-time highs, it kind of seems like there's no potential hope for this stock. And then when I kind of did some further research, I see some potential here. It's not the best trade I've ever seen in my life, but I kind of like the idea of it. So it's been horizontal in here for a little bit. Even when the earnings came out, it pushed below and then shot back up. So it seems like this 1430 is a pretty solid support. So that's kind of what I'd be looking to play. It's also got the problem of it kind of being in between its support and resistance. So you have a decent amount of risk to the bottom side and some not as high to go up on the upside. However, I've recently started getting into options. And one of the ideas that I kind of liked right around here is having a covered call. And basically that means that you buy 100 shares of the stock and then you sell a call to protect yourself to downside risk. And so the calls that I was looking at, we'll go on to analyze, or let's go to trade options. There's a lot going on here. What is going on? Too much stuff. So this is the call that I was looking to sell. And so it's a $16 strike price with a $1.02 premium for selling that. And so kind of the idea that I had here was it would protect you down below this support, and then it would make it so that if you sold at 16, you'd be getting paid for it at 17. And so it's not the largest trade in the world, but if the stock gets taken away from you and gets assigned at $16, oop, I hit my mic a little bit. So from $15.30 up to $17 would be 11%, which is a pretty decent trade. One of the reasons why I think that maybe this is not a great option is the fact that there's some more upside. As you can see, the stock has been falling for a while, and if it can push above this, there's a lot of room to go until it reaches another potential resistance. So it's kind of one of these stocks where it looks so dangerous that maybe it's a beneficial play to kind of limit some of your downside risk, but also kind of cap your upside potential. So that's kind of one of the things I saw here. We have some pretty solid support and resistance lines over here. This is only in the 180 day. But after I drew that, I came back here and these end up coming pretty far back. So I like this play if it can push above where it's at right now. The horizontal looks nice, but until it pushes above that, a long-term play is not super attractive to me. So here we are on CNN Money. I took a 5-day break from making videos, and they changed the whole look of their platform. So currently sitting at 1530, 48% year to date, down the bottom of its 52-week range. And when we come down here for the forecast, they have up 43% and down 21%. So this kind of also goes off of that potential play that I mentioned. I would never let it get down below, I think it was around the $14 mark. If I was in a position here and it fell below $14, I would be cutting losses super fast. So I would never let it get down to that $12 mark, but I kind of see that $22 as an upside. Let's see. So I would have it closer to maybe 20 as a high end, and then realistically to 1875 to close this, or to gap fill here. But I kind of like this to the upside. It's not often that you see a massive company like this have this sort of range in its price forecast, but that also comes with a lot of risk. Going over to Yahoo Finance, they have it as a hold currently, down in the short term, up in the medium term, and down in the long term, with its 1-year price target as 1543, so not a lot of upside there. I kind of agree with them on this. I think this is kind of a conservative outlook. As I'll talk about after I finish this section, the earnings projections for the future are not looking too great, and I think that Macys is going to have to change kind of how they work their business to recover from this incredible stock fall. So as I've talked about in a lot of these videos, I think it's really important to take a look at the competitors in the same type of space or sector that you're trading. I recently, when I first Googled Macys stock news, one of the first articles that came up was comparing Macys stock price year to date with TJ Maxx, or I guess the parent company of TJ Maxx and Marshalls, and Target. And so when you have this chart just showing how the stock has done recently, it's really surprising to see Macys doing so poorly and TJ Maxx and Target doing incredibly well. So that begs the question, is the risk involved with taking a position in Macys outweighing kind of the reliability that you have with Target or TJ Maxx? And I'm kind of leaning toward yes, a little bit. So this is one of the kind of riskier long-term trades that I've looked at in a while. Obviously, I'm long in Bitcoin, and that's obviously super risky. But for a well-established company like Macys, the track record it's had year to date does not make me feel super confident taking a long-term position. Some of the things I see on the chart, as well as the dividend, kind of makes me think that it might be an interesting trade. There's the potential that It falls out of that level that I charted, and then it's really important to take the loss right there. I talked about on the computer that I think that an options trade or a covered call on Macys could protect yourself to the downside a little bit. Be kind of worried about buying the call back after if the stock continues to fall, but buying a covered call kind of protects you from that downside risk. And there's a lot of downside risk when you're talking about Macys, just based off of the 1 year chart. But I think with such a well-established company, something that's been around since the late 1850s, and one of the giants in the retail space, I think it's very likely that Macys can recover in the future. Some of the things I'd be worried about, however, is the continued decrease in the stock price, making it so that the company has to cut its dividend. And we've talked about this with GameStop recently. Anytime a company has to cut a dividend, it's not a good look for the company, and it usually falls heavily immediately after the news comes out. And so when you have a company like Macys that's done very poorly year to date, the only kind of bright spot that it's had is the dividend yield has been increasing. And if you cut that yield, there's not a lot of great things on the chart. So overall, I think that Macys is a super risky play. I think it has incredible upside, which is kind of rare for a well-established company and stock like Macys. You have down almost 50% year to date, but if the company can figure it out and make better or have better earnings in the future, I think it's very possible to have a 25-50% profit based off of Macys. With that being said, it's also possible that the stock continues to fall and you lose a lot of money. So it's kind of rare to find such an established company that has this incredible range for potential upside and downside. So this is not something that I will be taking a position in anytime soon. As always, I like to set my alerts and kind of look to see what's happening in the future. But if you're looking to get into the retail space, I don't think that Macys is probably the safest play out there. It may have some pretty good potential returns, but it also has a lot of potential losses. So something to take into account. Dividend is very attractive, but the charts are not so much. On this channel, I talk a lot about buying companies that are something that you trust and you use, and Macys is one of those stocks. But the important part is I like to buy after bad news or bad earnings. And the reason I do that is the poor momentum pushes the stock further than it probably should, and it usually recovers after a week or a month after that. With a stock that's just been sliding for a year straight, you don't really have that. And so as a result, this is not something that's going to be at the top of my list on potential trades for my account, but it's something where maybe I'll take a paper trade on it, practice my options trading, and kind of see if I can make a profit off of this super interesting stock. So let me know what you think about Macys in the comment section down below. Do you think it's as doom and gloom as I potentially see, or do you see some upside? Maybe some changes in how the company is being run and a lot of potential upside. So let me know in the comment section down below. And if there's a company or an idea you'd like me to go over in a future video, please let me know in the comment section down below and I'll get to it as soon as I can. Thanks for watching. I'll see you in the next episode of Robinhood Top Stocks.